Hello, traders. Gary Wagner with the Gold Forecast. About 11 a.m. in Honolulu, Hawaii, Friday, the 4th day of February, and this is the Daily Reports Weekend Review. Gold is currently trading off about $7.5 this morning. Predominant change is not really due to normal selling. That's only causing it to be off about $3, $2.90 currently. Strength in the U.S. dollar is also tugging at it, giving it a negative 460 this morning. On today's report, we will review the trade that we put on, the week that we have seen, and our expectations for next week, all on today's weekend review. With about 2 hours left in trading, gold is under a little bit of pressure right now, currently trading off between $8 and $9. As I said, there's 2 hours left, so we will have to see exactly how the market wants to close over the week. We are looking at a 15-minute average, or what we call a Henkin chart. This was that pennant formation that we were looking at. I'm simply drawing it in terms of our support lines from these two areas right here, these two sets of lows here, and of course here. And of course our upper resistance line is coming from here and here. And as we can see, we did receive our breakout, of course, and this breakout came the other day. Had a lot to do with the issues over and civil unrest over in Egypt. The market as it was trading last night was very interesting. As it began to trade overseas, it was slowly going down, trading most of the night right around about 1349. It then did pop, and it popped up to about 1356, came back down roughly to the same area that it had been. And as you can see, it is trading with support right now, I see, at 1344, 1345, and of course that's based upon these tops that I'm looking at right here. In terms of the week in review, we really need to kind of step back. For that, we're using a weekly chart in which I've simply got a bar chart up. It is a weekly chart with our Elliott wave count, and this is our intermediate count that we're looking at, as well as our channel lines. And one thing we know is we were absolutely coming off of this triple top. We did hit a top, and the market was in fact full-blown into a correction. If we draw a channel line, and I'm going to pick the bottom two lows, so the beginning of this rally, and as you can see, this happens after in October 2008, and I follow it up to the lowest low I can find here, and then simply carry that channel line up. We can see that it has found, in terms of a logical place, support in this area. So that when we hit that 1308, that number itself was absolutely significant. And it was significant in that it came to a perfect Fibonacci retracement level, 1, and 2, in terms of a channel line, it seemed to be a logical place. I do think, tentatively speaking, we have found our bottom, and my belief is, finding this bottom, we will now progress to move within this channel here, but move back up this channel. So I think that the major part of the correction is over. Now, we do have this wave coming in. This is going to be our B wave, and this B wave that we're having is our intermediate count. But if we go back and look at the main count that I look at, which is our minor count, we'll see that we have just entered an impulse stage because we've completely completed an entire phase. For that reason, I've gone ahead and put back up our daily chart. This is our daily chart. It is in Henkin style, meaning an average chart. But in this chart, we are looking at the minor count. Now, the minor count you can see right in here, 3, 4. We hit 5 at the top of this triple top. Then we go A, B, C, so that this last rally that we began to see this week, this here in terms of our minor count right now, we are back to number one, wave number one within it. Now, in terms of wave number one, it will typically be a 3 or 5. And what I mean by a 3 or 5, you see these smaller minor counts within that count. So we're not going to have the market move straight up. The market will, of course, zigzag its way back up. Where do we think that it's going? Well, we talked about a couple of logical places. The logical place typically will go back and look at this A, because what typically happens when you go from a fifth wave, you get your first corrective wave A, typically you will get a move anywhere between 50 and 75% of that correction. 50% puts us at 1364, and 75% puts us at 1393. So those are the two basic targets that we will be looking at to see if the market does continue higher through next week. Those are the areas that we will look at for potential resistance. Traders, you know that the actual signal that we received that got us back long in the market was a fact that when the market came down and tested that 23% retracement level, the Fibonacci retracement level, and that retracement was what I call a deep retracement because it was going from this bottom to the top here, and at 23%, which was this area right in here, we saw some support forming. Now, we are looking at a daily chart, and the interesting thing on this daily chart is that if we take a look at the formation that we see, this is the chart. Of course, these are living charts because they continue to grow, but this was one of the charts that I used for my Kitco commentary this week. But if we take a look, let me go ahead and blow that up for us, traders. If we take a look at how this market came down, I think you're going to find something fairly interesting in this chart, and that is this 3-candle configuration. This is a weekly chart, by the way, and a 3-candle configuration on a weekly basis is giving me that particular structure that I look for when the market corrects, and that is long black candle, small doji star-like candle, and red candle or up candle. On the weekly chart, we actually got it. We got it very, very close to the longer term up channel trend line. So my belief is that the evidence is really overwhelming that we have in fact ended, at least at this point, our corrective stage. We will go into a large impulse wave on our minors and our B wave on our intermediate. That to me bodes for the next week or so, and of course there will be a subwave within that, but the next week to 2 weeks of this market trading higher. This has been Gary Wagner wishing you, as always, good trading, and we will talk to you on Sunday for another daily review. Bye-bye.